Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We're going to look at a market that's been packed. Quite the interesting ride we have been on with this cattle complex. We'll dive into what we're seeing going on there. But what about this tax with Argentina and exports? How is that going to have an effect on us? Or is it more going to be a focus for China refocusing on what they're doing with their purchases? We got a lot to look at, so stick around. More's coming up right after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again. As you can see, joining us is both Brian Splitt and Jim McCormick. They are with agmarket.net. And gentlemen, I appreciate you taking some time on a Friday to talk to us about these markets. And let's kind of start out with a big thing that happened on a Thursday, and that was Argentina and their export tax. Kind of talk us through it, how you guys see this might be maybe a detriment to what we see in our export opportunities, or how it's all going to unfold. And I'll just kind of throw it out there, and whoever wants to answer can dive in.
Sure, I'll handle that one, Susan. So effectively yesterday afternoon, Argentina announced that their export tax on ag products is going to be reduced. And so that's in an effort to help out the producer. The impact of that is that does make one of our competitors' products cheaper. And so we had an immediate reaction to that during the trade last night. Beans were down nearly 20 cents shortly after the open. The corn market was lower. The two markets that really took the brunt of the selling that lasted through the close today would be the meal market, right? So Argentina exports roughly 30% or close to a third of the world's meal needs. And so anytime you talk Argentina, whether it's weather or policy, the meal markets can be very sensitive to that. So meal did gap lower last night, closed near the lows of the day. And we also had wheat, which Argentina grows a substantial amount of wheat as far as their overall production. And so there is wheat exports that are now up for grabs. And so wheat market was lower today, down about a dime in Chicago, and now testing some major support that needs to hold. We're trying to build a little bit of an uptrend in wheat. The funds are still very short, but news like this just knocked us right back down to those support levels.
So you look at that, and I wanted to bring up, since you talked about wheat, and I know there was discussion earlier today that right around that 65 to 68% of the winter wheat crop was affected by this Arctic blast that came through earlier in the week. Though here we are, January, we're really not going to know anything till March, but there sure was a lot of chatter about some possible issues happening. Jim, what are you thinking?
Well, I think there's probably a risk of some damage. Like you said, there's no snow cover. It's been a very, I think there's more snow sitting on the ground in Florida and, New Orleans than it is here in Chicago at the moment. So, I think the risk is they saw some winter kill. You did see the market react early in the week to it, but the wheat does what it does. It rallies up and then it fades it back down, because the fact is we're still not competitively priced in the world market. And this damage is probably there, but the reality is also we're not going to know to the spring what's there. And, wheat, it's like a weed in a way. Remember, Susan, you got to kill it 7-8 times before it really dies down. I think the real wheat story could be in the springtime, not in the winter wheat, but it could be the spring wheat. We're hearing a lot of those guys up there just saying, look, the money's not there in the wheat. We're going to plant something else unless this wheat rallies. So we could actually lose some spring wheat acres, and that may be what finally wakes up the wheat market and really gets a bull market going potentially.
And could it be the potential of great demand and opportunities for wheat growth across the world to kind of put a hamper on our wheat prices here?
Well, that's the big problem right now. I mean, if you look at what's going on in Russia right now, they've taken over a big share of the world wheat market. And, we'll see how their wheat's in dormancy as well. But, the real problem with the wheat, I'd say also, is the U.S. dollar. Now it's corrected off its highs a little bit, but the U.S. dollar is so much stronger than a lot of the competing nations in the world that we use, that we're trying to sell wheat to. It's cost prohibitive for them to buy the U.S. wheat at the moment.
Brian, what's your thoughts on the steep decline we saw in the dollar this week?
We've had some movement in the dollar after reaching some highs that we haven't seen for a few years, and the dollar's had a very robust move to the upside off of really breaking out of a sideways range that we've been in. So I don't think it's a surprise when you start hitting some of these major round numbers. When you get to the 108, 109, 110 level on the dollar index, you're going to see some pullbacks from that. But, some of the bigger picture things that we're looking at for possible administrative moves from the Trump administration and how that's going to affect interest rates and how that's going to affect overall tariffs. And maybe Jim will get a little bit more into that and his beliefs. But I think that's also having an impact on the currency. And so I expect there's probably going to be a lot of volatility in the currencies as some of these things are rolled out over the next few months.
All right. Speaking of tariffs, what is your takeaway, Jim? There's been a lot of chatter since Monday.
Well, there's a lot of chatter. I mean, we don't know what it's going to be. I mean, President Trump has kind of been a little bit all over the board. During his inauguration speech, he was talking about rolling out a panel and discussing where maybe we need to layer some tariffs in. And then the day after that, he talked about a 25% tariff on Canada, 25% tariff on Mexico, and then on February 1, and then the next day he talked about maybe a 10% tariff on China on February 1. So we'll see what happens. The real question, Susan, with these tariffs are they a negotiating tactic or are they a finance tactic? Because, a lot of people assume this is Trump trying to bring people in, trying to lower tariffs and make it a little bit more level playing field. The problem I see, though, is President Trump wants to extend his tax cut that he put in when he was his first term. They all expire, at the end of 2025. To essentially extend those and not blow the budget out, you got to come up with about $4 trillion over 10 years. And some of the Republicans in the Ways and Means Tax Committee are already talking about financing a portion of those tax cuts with tariffs to a tune of $1.9 trillion. So the reality is how I see it, Susan. If you're going to layer tariffs on as a revenue source, there's really no way to negotiate it down, because if you negotiate it down, then you blow the budget out. So we'll see. There's just a lot of uncertainty. But, at this point, next week it could get interesting if they start enacting like Trump has threatened to do, at least earlier in the week.
Speaking of a trade that's been interesting, who would have thought we would have seen 212 cattle being offered, for example, in Northwest Iowa, and to see a market trade, Brian, like it has this week with continued highs after highs. What is your takeaway? And obviously, you go up that escalator. This might be a free fall elevator drop at some point.
Yeah, I mean, no one really knows where the market's going to top out. Over the last few weeks, we identified on the February live cattle, there's just an absolutely massive head and shoulder bottom formation. That whole thing measures up to about 206. I think it was 205.97 was my exact measurement, if I remember correctly. So, that was with where cash at that point was already trading over 200 as that was all developing. And so now that we've got futures through 200 and now the cash is making some new leaps, it's going to be this game of what the cash does and does the futures market want to go to that level. Now, at some point, I think there will be a bit of a trap where the cash market trades at a level that the futures just can't get to. And then things start to work their way back lower. And we know the fund positioning is extremely long. We're going to see new record length likely on the commitment to trade report when we get it Monday. We normally would get it on a Friday afternoon, but we had the holiday, so that'll come out Monday afternoon. And we've seen that before in numerous different markets. Whenever it's record length or record short positioning, eventually that boat does get turned the other way, and it can happen rather rapidly. So we could very well see some major corrections in front of us. But from a fundamental standpoint, we just don't seem to be doing what we need to do to get the extra, get the herd expanded. And it's still a problem that we're going to have to deal with.
Well, and Jim, it just seems like the consumers are still going for the beef at the counter. Prices haven't scared them away as of yet.
That's the key right now, Susan. I mean, the supply's tight. We know the supply's tight. It's been tight forever. But now the consumer continues to spend. The holiday spending was a lot stronger than a lot of people thought. And that's fueling this right now. And, the market's goal at the moment is essentially to price the consumer out. And that could, like Brian said, that could happen at any time. And the old line in this beef industry, it's up an escalator and down an elevator shaft, because this is a relatively small pit. So when the funds do start to run, it could go fast. And there's a couple things that could trigger. It could just be the U.S. consumer balking. It could be the trade war. Remember, we export a lot of beef around the world. If we slap tariffs on, say, China, Mexico, Canada, or any of these countries, Europe, they could turn around and tariff our beef, and that may be enough to put the market top in. The other thing I'm a little bit concerned about is Trump's immigration policy. He raided a seafood factory in the East Coast earlier this week. If he would start going into maybe some of these slaughterhouses and you start scaring workers from showing up and you lose maybe a third of your capacity of workers to kill, what happens to this market? It'll send the product prices through the roof, but the cash market may collapse as we have too much, not enough to, kill capacity. So there's a lot of risk. I would tell people to make sure they have some risk protection under it, because I think the rug will be pulled out from under us. It's just a matter of when.
Brian, as we look at the bigger picture of 2025, a recent poll had talked about producers wanting to do some cutting back, whether it was their fertilizer inputs, the number of passes that they were making over the fields. Bigger picture, what are you hearing in order to stay in that net profitability, or discussions that you guys might be having with some of your clients?
Yeah, as far as cutting back, I mean, that can be a sentiment, and the market may have ways of changing that. If we see some increase in value in the futures market on some of the new crop products, that might make the producer a little bit more willing, obviously, to look at doing the extra application and going for the extra bushels. The problem really lies mainly with the soybean market, and even at $10.50 a bushel, nearly $1 off the lows, it's still not that attractive for most producers. And corn still wins in the big picture for profitability. And for a lot of areas where the ability to grow 60 to 70, 80 bushel beans is a pipe dream, and you still have the ability to grow some very good corn yields. So maybe we're talking Northern Plains type growing regions. It's just not a conversation that has much wiggle room. But I think right now we're going to be going into a period where we're making our spring averages for crop insurance. And if we get a little bit of upward mobility, because one thing we've seen recently is really the old crop, whether it's corn or soybeans, has been leading the way higher. So if we get the new crop to participate a little bit more, reach some levels that make the producer a little bit more comfortable because of insurance guarantees, then that conversation may be a moot point in the future.
And finally, as we get ready to wrap everything up, Jim, you guys have a great event coming up next weekend. Quickly, if you want to share some details.
Yes, it's next weekend, Sunday afternoon. It's down in Nashville. I don't remember the hotel, Brian. Do you remember?
Renaissance Nashville,
the Renaissance Nashville. On Sunday afternoon, it begins, and then it follows up a full day on Monday. We've got a lot of great speakers coming in. We still do have a feyou seats available. If anybody's interested in attending or finding out more information, just go to the website, agmarket.net. Right at the top of the page, there's a banner that you can book your hotel room, as well as get the last few seats available.
Wonderful. Gentlemen, thank you so much for joining us this afternoon. A quick reminder to everybody, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And of course, information on the show is provided for educational purposes and not intended to influence legislation, government policy, or action. And that's been another edition of the Nebraska Soybean Board Weekly Market Roundup.